Ms. Asha Ramgobin, so that at least we can continue the discussion even after today's webinar. We can still continue the discussion afterwards, because illicit financial flows is something that needs to be dealt with and needs to be dealt with urgently. My name is June Cynthia Okello, and I am a qualified advocate of the High Court of Kenya with a postgraduate diploma in law from the Kenya School of Law and a PhD in tax administration from the Kenya School of Revenue Administration, and a bachelor's degree in law from Kabarak University. I am an economic governance associate at the Pan-African Lawyers Union, where I leverage my skills and expertise in tax law and administration and corporate and commercial practice to provide economic governance support to the Pan-African legal profession. Our first panelist, Ms. Asha Ramgobin, is from South Africa and is the Executive Director and co-founder of Human Rights Development Initiative, a regional human rights organization. She's an extraordinary lecturer with the Center for Human Rights at the University of Pretoria. She has practiced as an advocate at the bar and holds a Master of Laws degree in International Human Rights Law from Lund University, Sweden. She has more than 27 years of experience within the access to justice movement in South Africa, within the African continent, and internationally. She received an honorary doctorate from the University of Gothenburg, Sweden, in recognition of her work with university-based law clinics in Africa and internationally, and has worked to strengthen organizations in more than 20 countries in Africa. She's dedicated to promoting social justice, the rights of marginalized groups, and community development. She's a person who connects dots and is enthusiastic about learning to better engage in social justice work. Consequently, 11 years ago, when she learned about the revenue lost through illicit financial flows from Africa, she immersed herself into this subject as a human rights issue and wrote, taught, and advocated for it to be addressed as such. She started reading for an LLD on international law and tax havens soon after she turns 50, and now at 55, she will complete it. She has been an anti-apartheid activist from her youth and continues to dedicate her work towards furthering egalitarian values and fighting injustice. Welcome, Ms. Asha Ramgobin. I'm going to introduce Mr. Alan Muhereza Murangira, who is the co-founder and team leader of Youth for Tax Justice Network, a Pan-African youth organization working towards meaningful youth participation in influencing decision-making on resource mobilization, allocation, and utilization in Africa. YTJN envisions resources mobilized and deployed for the benefit of the young people on the continent. He is a lawyer with explicit interest in taxation, intellectual property, and natural resource governance. He is passionate about youth participation and engagement in influencing decision-making and livelihood development. He previously served as the president of the Young African Leadership Initiative, YALI, alumni chapter of Uganda. He holds a Bachelor of Laws degree from Makerere University, Virginia State University, VSU, and a certificate in copyright law from Harvard University. He is a 2021 African Civic Academy Fellow, a 2021 Stockholm Internet Forum Fellow, 2018 and 2016 Youth Forum Delegate, 2016 Young African Leadership Initiative Fellow, and 2015 International Tax Justice Alumnus, among others. Welcome, Mr. Allen. Now, a few housekeeping rules before we get into our first presentation. We require you to stay muted unless you need to speak. There is also simultaneous interpretation. There's a button at the bottom of the Zoom screen where you can, if you prefer English or French, it's available. The session will run for about an hour and plenary at the end. So you may post your questions and comments in the Q&A or comment section. Let's make this session as interactive as possible. If you require to speak, you may raise your hand and you shall be given the opportunity to speak. So we're going to give the floor to our first presenter, Ms. Asha Ramgobin, and then Mr. Allen will intervene a bit later. Welcome, Asha.
Thank you very much, June. Just want to confirm that you can hear me.
Yes, we can hear you clearly.
You can hear me clearly. Okay, good. And you see my screen? Okay, excellent. Thank you very much to Paulo.
Yes.
And so thank you very much to Paulo and to you, particularly June, for organizing these webinars. I have to say, committing myself to 3 Fridays in a row wasn't easy, but I'm really glad that I have done it. Last week, I connected from somewhere else, and today I'm connecting from somewhere else. But I'm nevertheless very, very pleased that we have done this, particularly that we have had time to delve deeply into certain aspects of illicit financial flows, particularly the human rights dimensions of illicit financial flows, and to culminate today with a focus on Pan-African unity and solidarity to end financial secrecy is very, very satisfying to me, I must say, because of the work we did in putting the policy briefs together. So before I begin the presentation in earnest, I would just like to share with all of you that when I speak of Pan-African unity and solidarity, and quite frankly, all through, when we talked of obligations of non-state actors and state actors in the first session, and last week when we talked about the obligation to mobilize maximum available resources to curtail illicit financial flows, and today, as we discuss Pan-African unity and solidarity, each one of my presentations is rooted within a legal framework, an international human rights law framework, and to a very large degree based within the African Charter on Human and People's Rights. So while concepts like solidarity, unity have a touchy-feely side to it, let's work together, together we can do more. There are lots and lots of proverbs that we can look at when we think about solidarity. What I am focusing on today is the obligation in international law to work in solidarity. Pan-African unity and solidarity as an obligation within the framework of international human rights law. So let's start. And when you see my first slide, you'll see that I'm looking at UN conventions to start with, and to look at patterns of voting at the UN level. I'm going to start with looking at how solidarity has manifested or not manifested within international multilateral bodies, and then come directly to the issue of illicit financial flows. But we're going to look at related situations. So in the early 20th century, the Convention on the Suppression of and Punishment of the Crime of Apartheid was adopted. And this was adopted after mobilization by the African states, newly independent African states, and the non-aligned movement that existed at the time. And to some degree, you still see its manifestation today. So how this convention, the Convention on the Suppression and Punishment of the Crime of Apartheid, one would expect that it would have been unanimously approved. But what we saw in reality was 4 countries at the UN General Assembly voted against. There were 26 abstentions and 91 voted in favor. Today, 109 have ratified, 109 states have ratified this convention. Not long ago, just earlier on in November, actually just on the 22nd of November, we saw the UN Tax Convention. and not the convention itself, but just a resolution in terms of which the UN General Assembly agrees to begin the negotiation, to begin the process of developing a UN tax convention. So to remove the whole regulatory framework from the OECD, where it currently sits, to the multilateral body of the United Nations, where all countries are meant to have an equal say. And what we saw there was 48 countries voted against this resolution, 9 abstained, and 125 voted in favor. Okay? This 125 that voted in favor were mobilized by civil society, but by and large by the Africa group within the United Nations. But I would like for us to just talk a little bit about this convention on, let's just call it the Apartheid Convention in short. I'd like for us to talk about this for a little while before we move into tax illicit financial flows, because I found it quite curious that, and I asked myself, is it really just a coincidence that the UK, the US, France, Germany, Belgium, even our historic partners, the Scandinavians, Swedes, Norwegians, Danish, are not state parties to this convention? I found that very curious. And I would be very interested as to understand why. I would also be very interested to ask and to understand whether it is merely a coincidence that it's the same countries that voted against the UN tax convention that we talked of, many of the same countries that voted against it, are also not parties to the Apartheid Convention. Is that a coincidence? Is there some connection between the two? I am not, in preparation for today's webinar, I started to think about all these things. I looked at these conventions and started to think about all these things, and I haven't yet come to a concrete answer. So I am going to be raising many questions that I haven't yet reached an answer to. It would require much more work. It would require for me to go into the debates, into each one of those countries to find out what it was that was going on with those countries, what their reasons were. I do know that there was a debate at the time of the passing of the Apartheid Convention. There was a debate as to whether the Apartheid Convention should be expanded to cover apartheid and related sorts of activities and policies beyond what we saw in South Africa. So should this Apartheid Convention, the suppression, a convention on the suppression and punishment of the crime of apartheid, should it be the suppression and punishment of the crime of apartheid in South Africa? Or should it be, as it is today, the crime of apartheid that then could also cover the activities of, for example, Israel in Palestine? So the question at the time that this convention was being negotiated was, one of the issues was this. And my question is, was that the reason why countries like France, Belgium, Germany, Sweden, Denmark, my particular interest is why Sweden, Denmark, Norway, Finland, who were so strong in the anti-apartheid movement, why, in South Africa, why did they not also sign up to this particular convention? Why are they not state parties even up to today, right? We understand that Germany, the GDR, German Democratic Republic, I think it was called, but they had signed up to this convention. West Germany had not. So let us ask ourselves that question, and perhaps some law student or master student who's thinking about doing a PhD might want to actually go more deeply into this. I certainly will be going a little bit more deeply into it for my own studies. But I think it would be very interesting to find out whether there is a reason, it's not just a coincidence that it's similar countries that have voted against the UN tax convention and bringing tax issues into the UN system, and the same countries voted against the adoption of the UN Convention against Apartheid, but not voted against, but are not state parties. Let me just be clear. The ones who voted against the convention were the UK, US, South Africa, that was apartheid South Africa, and Portugal. They voted against the adoption of the convention. So these other countries that I'm talking about did not vote against the convention, but they are not state parties to it, okay? Let's just park that for now and now come to the issue of solidarity. One of the reasons why I have chosen to focus a bit more attention on this particular experience, I would say, of solidarity is because solidarity has been classified as like a fairy tale. The idea of solidarity within international law has been described as a fairy tale, a unicorn, something that's mythical but doesn't actually exist. And as a South African, it was very, very hard for me to embrace that notion because of our experience, our tangible experience of solidarity within the international legal framework. And what we saw, the road to this convention, to the adoption of the convention, and the road to our liberation in South Africa included a situation where from 1952 to 1990, every single year, the UN General Assembly condemned apartheid as a violation of Articles 55 and 56 of the UN Charter. Every single year. The Security Council also did it, but the UN General Assembly, they did it routinely, it's described as, but the UN General Assembly adopted and condemned apartheid each year. In 1966, apartheid was declared a crime against humanity. And then this convention was adopted. But as I said, to date, many OECD countries are not member states. They're not parties to this convention. So this is our experience of apartheid. Now let's talk about something else, slavery. I would like to just read this extract because there's a very interesting...
Cet extrait parce qu'il y a toute une histoire intéressante.
The final declaration of slavery as against peremptory norms of international law and the suppression of slavery as well. But this particular extract is a very interesting extract that I would like to read to all of you. While one person's enslavement of another persisted since time immemorial and existed as part of most civilizations throughout the ages, an industrialization of enslavement emerged in the wake of the European voyages of discovery, resulting in the transformation of the New World. That step change led to the enslavement of an unknown number of indigenous people of the Western Hemisphere and an estimated further 12.5 million people being forcibly taken from the African continent between 1501 and 1866 and put to commodity production in the Americas, the vast majority destined for the sugar plantations. While some intellectuals, notably Jean Bodin and Montesquieu, challenged the moral and philosophical underpinning of slavery, there persisted a consensus across Europe that slavery, though contrary to natural morality, was legal, jus gentium, meaning it was legal under the law of nations. So why do I talk about slavery when we're dealing with illicit financial flows and Pan-African unity and solidarity? As many of you know, the issue of illicit financial flows, the definition of illicit financial flows, and whether it includes that which is immoral, that which goes against public morality, contra bonos mores, as we would say in Latin, or only that which is purely illegal. So, for example, is illicit financial flows limited to tax evasion, which is illegal, outright, black and white, illegal? Or does it include aggressive tax avoidance, which is on the borderline of legal and illegal, in the gray zone, you could say? But it goes against public policy, it goes against natural morality, one would say. As you can see from this extract, one of the reasons why I chose to include this is because apartheid, on the one hand, slavery on the other, were two huge mountains that needed to be overcome in our history, two major blemishes to our history as a human race. It required massive amounts of collaboration, and you'll see in the next extract what it entailed to some degree. I'm not going too deeply into it, but you'll see what it entailed to some degree, in summary at least. But you see the commonality where even slavery was considered legal, and the prohibition against slavery was not something that just took place overnight and happened easily. It required unity, it required solidarity, and it required targeted, focused activity. So this is what it took. On the one hand, you had a slave rebellion, which led to a revolution in 1804, which led to the independent Republic of Haiti. That then led to the 1815 Congress of Vienna, where European powers were now forced, in a sense, to declare their intention at this stage, their wish, their intention. It wasn't at this stage law, but their intention to consider universal abolition of slave trade. Two, and this is important, to bring an end to a scourge which has for a long time desolated Africa, degraded Europe, and afflicted humanity. Okay, so first there was a slave rebellion, then the revolution, then Haiti being declared independent, then the Congress of Vienna, which then led to this declaration. And then you had the abolitionist movement that resulted in several bilateral treaties that included the right to search. And this web of treaties eventually led to the end of this Atlantic slave trade from Africa, the Middle Passage, it was called at that time. It led to the end of that form of slave trade, and it created the diplomatic space required for the final negotiation of a multilateral treaty, which then in international law, slavery and slave trade was finally prohibited. If you would like to read more about this, I've included the web link there. But to just say, I hope that you can see some elements of commonality. I hope that you can see that these very, very difficult problems of slavery, slave trade, apartheid did end in some. Obviously, we have modern forms of slavery. And so the fight against slavery has not ended. The fight against slavery has not ended. But the battle, some very significant battles were fought and won to declare slavery and slave trade crimes against humanity, apartheid, a crime against humanity, and to have these international conventions. You will find, even with the International Convention Against Slavery, that the ratifications and the state parties, I think there are 91 state parties to the Convention Against Slavery, which I found quite difficult to swallow, because there are many countries on this continent that are actually not part of that convention. But let's leave that for now. Let's just take from these two examples that there were huge problems, major issues that were actually legal. Apartheid was legal. Slavery and slave trade were legal. And they were dealt with. It took years to deal with them, but they were dealt with, summarily, one could say. Now coming to more present day manifestations and present day, what I feel were missed opportunities, where the pandemic, the COVID pandemic, gave us an opportunity to show a form of solidarity, international solidarity, that up until now we have not yet seen. And within enclaves, that solidarity was there. So within Europe, and within the medical profession, sharing information, sharing knowledge was there. But across continents, did we experience the type of solidarity that we would have expected between North and South, for example? At the time, South Africa was leading the AU. South Africa was, and President Cyril Ramaphosa said that basically Africa's pandemic prevention, preparedness, and response should be characterized by unity, solidarity, and coherence between countries, as was the case during the COVID pandemic. So they were talking about pandemic prevention, preparedness, and response as after learning from the lessons of COVID, right? I would like to now come to another, just today, I think there was an article in the newspaper that Don Dare shared with us regarding Africa's common position on asset recovery and the steps that are being taken to recover artifacts that were stolen from Africa. A study was done not very long ago by the Institute for Security Studies on common African positions on global issues. And you see there's these there are all this list of common African positions that have been adopted, and the focus areas, including on illicit financial flows, women in leadership, integrating gender equality on climate action, the development agenda. This particular study evaluates the common African positions on global issues. And if you see the key findings, what you will see is that even though we have these common African positions, we have had certain problems with them. Firstly, we have not owned, AU member states have not owned those common African positions. That has been one of the weak links. Many states have been struggling with the preparatory and post-adoption work required. There's been over-dependence on external partners to provide resources, and that has been counterproductive. So you can, when you have time, you're welcome to read it. I've put links to it here. It's not a very long report, but the sum total, what's really important about this report is it emphasizes that despite all the problems with negotiating a common African position, that it might be convoluted, it might be politically stressful, it might be extremely difficult, it might even have these ownership issues. Nevertheless, common African positions are an essential component when addressing very important global issues. What the recommendation is that they should be more inclusive, participatory, and representative, but that they actually need to be adopted, there is no doubt about it. So we see again, in the context of the tax convention, how important common African position was. But what we need now is a more participatory, inclusive, and representative process through consultation, coordination, and proper communication that then makes these common African positions more tangible realities. Now coming to solidarity and threats to solidarity in the fight against illicit financial flows, and coming now specifically to illicit financial flows, what we see is, on the one hand, the common African position, which results in the UN Tax Convention or the resolution to work towards a UN Tax Convention. But on the other hand, you find African countries operating as tax havens, and they have practices that could be classified as harmful tax competition, in terms of which tax incentives, tax treaties, administrative measures that result in ease of doing business, all designed to outdo competitors. And who are these competitors? These competitors are actually other African states. So you see, on the one hand, the solidarity giving rise to a resolution that's adopted at the UN. And on the other hand, you find harmful tax competition and outdoing competitors where one African country is pitted against another African country, and financial secrecy, opacity, imbalanced tax treaties all leads to Thabo Mbeki's report talking about what he described as the race to the bottom. So we see, I'm going to give some tangible examples of what I'm talking about here, where you see an ongoing competition between, for example, Casablanca, Cape Town, and Johannesburg for first place in Africa on the Global Financial Center Index. If you look at the Global Financial Center Index, which is another index, the Financial Secrecy Index exists, but the global financial centers also have their index, where they are talking about who's doing what and who's the best, which is the best global financial center to invest in and to work through. And on that index, when you look at their own analysis, you will see that Casablanca in Morocco, Cape Town, Johannesburg, all competing for first place in Africa on the Global Financial Center Index. And what does this mean? There's potential for increased secrecy in newly established financial centers, like the one in Kigali, like the one in Nairobi. Kigali, you know, there's a huge area of concern, a red flag, because of a bilateral agreement between Rwanda and Luxembourg, where we know Luxembourg is a well-known secrecy jurisdiction. And we know that this bilateral agreement is meant to help Rwanda develop its financial center, modeled perhaps on the same guidelines as Luxembourg. Here's another example of a bilateral double tax agreement between South Africa and DRC, where double taxation agreements are meant to prevent taxation in two jurisdictions. But in this particular circumstance, what you have is a circumstance where South Africa has negotiated this double tax agreement such that companies are encouraged to do business in the DRC, but through South Africa. So if they do business in the DRC through South Africa, they would then have a 4% advantage on withholding tax on royalties from any other company that does business with the DRC. And when it comes to withholding tax on dividends, if the company is a South African resident, in other words, registered in South Africa, they will only pay 5% on withholding tax on 5% withholding tax on dividends, whereas a company, any other company, would pay 20%. So you can see that these double tax agreements are now designed, and this is between two countries on the continent. They're designed to encourage companies to work through South Africa, which means that South Africa then gets certain benefits and is able to attract certain elements of the revenue that otherwise would have actually gone to DRC. So coming now to the whole notion of tax havens, secrecy jurisdictions, and international financial centers, what we find is that they play a facilitative role. They basically provide a place to hide funds and provide a means to do that. And we do know that Switzerland, the US, the UK, and together with its crown dependencies are at the top of the list of financial, of tax havens and secrecy jurisdictions. But African countries are gaining space in this haven industry. And they are now providing a gateway into Africa for corporates. And that gateway is basically expanding. What you find is African governments arguing, how do we stay competitive? If we have higher corporate tax rates than our neighbors, the company is just going to register in Zimbabwe, in Victoria Falls, in the new tax, the financial center that they're wanting to put together there. If we lower our tax rates even below the level of our neighbors, what would happen to us if they increase secrecy and provide safe havens to companies that are doing business with us? They're going to experience the advantage. Companies would relocate to them, and we will then lose out. If we impose a wealth tax, people will leave, and so you have that anxiety, that fear, and so the competitive behavior pattern within Africa becomes even more extreme, even though at the exact same time, we are negotiating at the UN and arguing for the UN to be the hub of international taxation and the framework for international taxation. At the basic level in our countries on this continent, this is what's happening. You have international financial centers being developed slowly, with all these different components being incorporated, secrecy components being incorporated. So the question then is solidarity in Africa fact or fiction? Illicit financial flows, we know, is a global phenomenon, and we know it affects Africa in a much more drastic way. We also know it is a result of an unfair international economic order. This unfair international economic order is what is the basis for these international financial centers, because they actually are important kegs in that wheel. So we have known the African when you look at the African Charter on Human and People's Rights, you will see that we have known for a long time that there is a need for a reawakening and a new interpretation of what African solidarity in action actually means. And if we compare the principles, the normative standards in the African Charter with state practice and conduct, if we look at individual rights and people's rights, and if we look at individual duties contained in the African Charter, we will see that there is a framework for solidarity. And this form of solidarity, Judge McDonald, I'm going to be about 5 minutes more, just in case you're getting a bit nervous about time. Just 5 minutes more, and then I will be, I'm rounding up now. So in international law, the principle of solidarity is considered as neither charity nor welfare. It is an understanding among formal equals that they will refrain from actions that would significantly interfere with the realization and the maintenance of common goals or interests. Solidarity requires an understanding and acceptance by every member of the community that it consciously conceives of its own interests as being inextricable from the interests of the whole. No state may choose to exercise its power in a way that gravely threatens the integrity of the community. There are several questions that arise from that extract. Judge McDonald was a judge of the International Court of Justice. And there are several questions, as I said, that arise from that. The one question is, if states have these negative obligations to, in a sense, do no harm, to refrain from certain actions, does this then entail refraining from encouraging corporations to use their jurisdictions to hide ill-gotten gains and evade tax? Tax that should have rightly been paid to another state. Should this obligation to refrain or do no harm require states to at least assess the potential direct impact of its tax policy on another country's tax base, tax policy and economic activity, especially where we experience these vulnerabilities? Is reciprocity and mutuality an essential component of state obligations in the context of solidarity? And if it is not essential, then is it at least desirable? And then finally, how can such obligations, responsibilities, or duties be enforced? And can sanctions be imposed upon those states that deliberately harm other states in this way? So Pan-African unity and solidarity, my submission now, and in the policy brief, you will see these are now direct recommendations that come from the policy brief that I prepared. What I'm saying at the end is that Pan-African unity and solidarity will not materialize merely as a result of heartfelt speeches, proclamations, declarations, or even after adopting and ratification of the African Charter. But instead, it will be built upon a collection of concrete acts of solidarity demonstrated through, tangibly demonstrated through state practice. And what am I talking about here? What is needed? So what I'm saying is, building upon all the policy briefs that I've already prepared, all the 4 that we've prepared, here are some of the building blocks. First, what should state parties refrain from doing, and what positive steps should they take, right? Firstly, they should refrain from encouraging corporations to use their jurisdictions to hide ill-gotten gains and evade tax through their policies, regulations, and financial systems. Positively, they should undertake a tax spillover assessment, which we talked about, I think, in the first webinar, to address the negative implications of their policies and address banking secrecy, financial secrecy, etc. They should renegotiate bilateral and multilateral agreements with other state parties, and they should renegotiate resource agreements with multinational investors. In fact, there are old form trade agreements and new model trade agreements that are already on the table. And African states need to simply get on board with those. We talked about common African positions. We need a common African position on a minimum corporate tax rate. We should not be looking at just what the OECD says or anyone else. What do we say should be the minimum corporate tax? We need standards and protocols for beneficial ownership transparency. What are our standards and our protocols for this around automatic exchange of information and cooperation in tax matters and country-by-country reporting? Importantly, the fifth item, these other items have been dealt with extensively by Tax Justice Network and are kind of included here, but importantly, the introduction of a wealth tax in each country also needs to be included. Number 3, state parties should negotiate as a bloc on financial secrecy standards at global forums. State parties should cooperate on tax matters and practice healthy competition among themselves rather than harmful competition. They could, for example, share capacity and assist in the development of capacity of other state parties. State parties should work together to hold multinational corporations accountable for transgressions. So in investigations and in prosecutions and in recovery, state parties should hold each other to account for transgressions from the transparency standards. And particularly Article 21 of the African Charter, which is open for the use of the interstate complaint mechanism. And we should actually start holding each other as states accountable when we transgress. And finally, that we should report on the progress made toward building African unity and solidarity in our periodic reports to the African Commission on Human and People's Rights. So at the end, I just want to quote a UN representative who talked at the end of the adoption of that resolution on tax within the UN system. And he said that this resolution is not just a policy document. It is a testament to our collective resolve for a fairer, more resilient global economy. And I just want to end on that note by saying that this need for Pan-African unity and solidarity is not just a luxury. It is something that is absolutely essential for our survival as a continent. Thank you very much.
Thank you so much, Asha, for such a wonderful presentation. We really appreciate your input concept of Pan-African unity and solidarity. Really has stuck with us, especially after the tax convention vote that was held about 2 weeks ago. Can you hear me?
Yes, I can hear you. Thanks. Thanks. And sorry about taking so long.
No, it's okay. It's fine. Today is our last webinar, so we want to make sure we get the most out of it. Our next panelist, Alan Mohereza Murangira, is going to take us through the role of lawyers when it comes to financial secrecy. Of course, when you talk about Pan-African unity and solidarity, we're also talking about the unity of different people in different professions in uniting to fight illicit financial flows and so to not sure if Alan can.
Yes, I can hear you. Can you hear me?
Right. Yes, I can hear you.
I can hear you. Can you hear me?
The floor is yours.
Nice.
Yes, I
Thank
can.
you very Thank you very much. And it's really quite hard, I
The floor
must
is
say,
yours,
to
Alan.
thank you, thank you. As I was saying that it's quite actually hard to present after such a comprehensive presentation by Asha, but I'm going to try and then we'll see. I'll just do my best because it becomes quite hard to top such a presentation. Good morning once again. I am Herza Alan. I'm the team lead at Youth for Tax Justice Network, and I'll be taking us through a session around how the legal professional, how lawyers facilitate the perpetuation of these financial secrecy jurisdictions. And then I'll have a also brief discussion about then what can we do to be better, or what can we do to contribute positively towards the solidarity, the African solidarity that we're talking about, especially when it comes to fighting illicit financial flows. I'm going to share my screen, have a brief presentation, so it will not take a lot of time. Can you confirm that you can see my presentation?
Yes, we can.
Nice.
Yes, we can.
Nice. Okay, so mine is actually quite small to say in terms of what I will be discussing, and I'm asking if this is as business as usual. And I'll take us through what is expected, of course, as lawyers when we go out to or when we're out there to do work. And the expectation that Asha has just shared with us that there's that quite need of solidarity that we need in terms of fighting secret jurisdictions. So my presentation is going to take just about four areas. I'll just give a brief background of YTJN. I'll discuss briefly about enablers of illicit financial flows through these secret financial jurisdictions. And then I will also discuss lawyers as key enablers, because some of these injustices that some of which Asha talked about within her presentation have been perpetuated uh, mainly or enabled mainly by the legal profession. And I remember also saying something to the effect that um, for example, slavery was legal, apartheid was legal, and everything else almost was legal. And if it is legal, then for us within the legal profession, I think that is game. That is something that we can work within. And then, of course, I'll end my presentation around areas where we can, as lawyers, contribute positively in this struggle against financial secret jurisdictions, and by then contribute to the solidarity that we've been talking about. So yes, YTJN briefly. YTJN is Youth for Tax Justice Network. It's a Pan-African youth organization. We are based in Kampala, Uganda. We started out in 2017 after the Pan-African Conference on Taxation and Illicit Financial Flows, where we decided to have and engage young people around issues of resource mobilization, allocation, and utilization for their benefit. We do work around four major areas, around youth and revenue governance, youth engagement, and also youth economic empowerment. The fourth, of course, being that which is internal, that is on knowledge management and institutional learning. And within all these areas, the major crucifix of what we are looking at is, where do you identify and center the young person in conversations around resource mobilization? So resource mobilization, you look at the entire chain, trade, tax, debt, aid, everything in between. Where do you locate a young person within those conversations, especially if you're a state party, or if you're a government, or if you're a policymaker? Secondly, how do you allocate those resources? It's not enough. And part of the hindrance of also domestic resource mobilization has been what we use the resources for. So it's not enough to mobilize them. we also want to locate young people and young voices within the allocation processes, but also have to see them even after allocation, because you could mobilize resources, allocate them, and then not utilize them for what you've allocated them for. So that brings in also the accountability processes. So basically, that's the whole area of what we do, and we just want to have young people contribute to some of these decisions around how resources are raised, allocated, and mobilized. We're based in Kampala, but we do work mainly within East and Southern Africa. Now, financial secrecy, Asha has really talked about quite a lot of it, but I think I'm coming at it just to say that it has been a problem. We've for the past, I don't know, 30 years, 40 years, have said that tax havens, financial secret jurisdictions have been an issue. And the question has been, of course, why have they been able to remain active the way they have for all this time? And when you ask such a question, then you get to know that there should be an environment, or there should be levers, or there should be certain enablers that have kept it going on and very strong in that regard. I'll also say, if I just briefly talk about some of these enablers, is that from the Mbeki report, the realization was that 65% of the outflows from the continent were through commercial activities. So these commercial activities, in most of the cases, with the exceptions of criminality like tax evasion and pure criminality and all that, most of those are legal transactions. So if you look at 65% commercial through commercial ways, 5% through corruption, and then the remaining part being criminality. The interesting bit is that where I wanted now to briefly just talk about the broader enablers, and then my next slide or my presentation will then really be talking about lawyers as one of the key enablers. Of course, some of the enablers we're having are accountants, and a lot has been said, or a lot has been not said about this very good profession of ours, but they are one of the people that have made it in a way, or enabled companies, especially multinational companies, to be able to prepare their books in a way that you can be in jurisdiction A and account for resources in jurisdiction B. And for a lack of better word, I call it creative accounting. And these, with the help of course, ourselves, the lawyers, have been able, and they are the biggest key enablers of these financial secret jurisdictions. The other big ones, and for the, when we talk about accountants and you think about the big four and their role that they've played in first the advice they give, but also in planning and perpetuating. And I will give an example later on how this has kept on going. But my major discussions around the legal profession, the lawyers. But I'll briefly the other enablers, we have the bankers or the financial institutions, where literally these monies move, or which are used to move monies from jurisdiction A to jurisdiction B, and these ones are also at the center. So it's like a trifecta. You have the bankers, the lawyers, and then the accountants, and within themselves, they've been able to both within the African continent, but also off the African continent, been able to perpetuate and enable financial secrecy, and to bring to what Asha said, and that's why now we also initially, most of these tax havens, with the exception of Mauritius, had always been out of the continent, had always been some islands somewhere, had always been, but now we are seeing that now we have starting to see some sort of incentive for some African countries to set up financial centers, Kigali, Nairobi, on top of those that have already been existent in Cape Town, Joburg, and Morocco. Of course, the lawyers, and this one I will talk about them within the next 10 minutes. But basically, how we've been doing it and perpetuating it has always been with the advice we give and everything. But this one I'm going to cover in details. And of course, there are other actors. Me here, I highlighted politicians, but there are other actors general on top of the accountants, the bankers, and lawyers that also create an environment, both whether it's by law in terms of statutes or in terms of the regulations of conduct of these other people. So you could find that the regulators, let me say, of lawyers, the professional bodies of accountants and all that. So me, I just chose politicians, but there are quite a number of actors that have also been able to perpetuate and enable the financial secrecy within the continent. Okay, so now this is now it comes back to the legal profession as enablers for financial secrecy. I must say that from the beginning, for a lawyer, it is always a conflict. The expectations that as a lawyer, first in terms of the work that you have to do, that you have to be a gatekeeper of sorts in terms of the profession, in that you have to do diligence, for example, on your client, where they're getting the money and all that, but also have an obligation to report or to make known to the authorities if anything at all is a challenge. Now, from the word go, there is usually a conflict or there is usually a contradiction within the profession itself. And I'll give an example. When I was studying to do law, I wanted to be a tax consultant. And until around 2015, when I did the academy, and then I saw things in a very different sort of light. And there was that contradiction that, as a lawyer, I'm trained to give legal advice to my clients. My first duty is to my client and my client's wishes. So at that point, whatever I do should be ideally between me and my client, as long as it's not illegal. And then, of course, there is also that duty that whatever I discuss between myself and my client should remain between us under our client privilege. So I have to say that at the beginning, that from the word go, there's always that conflict that from what you're expected to do, or from what you ought to do, or from what we think you should be able to do, to what then is required of you to do. So there's an obligation that you should know your client, for example. But in terms of resources, in terms of even the willingness to want to know your client and all that, there could be questions around whether lawyers can be able to do that. Also, there is an obligation that if you got to know your client and you got to know that there is something that they're doing that may be detrimental or illegal or in any other way that may harm other people, then you're obligated to report that to authorities. And I think also that is now usually where the question starts from, why lawyers then go on to be enablers. I'll give a few ways in which lawyers are enablers within these financial security jurisdictions. And one of them is that they are at the center of creating legal schemes that enable financial secrecy. You will not come across any agreement, any contract, any sort of binding documentation that has been drawn up by a lawyer that most cases does not have clauses referring to secrecy, confidentiality, and all sorts. Of course, for the good measure of it, in terms of privacy protection, data protection, and all that is fine. But in most cases, it is us advising people that certain things should remain a secret, and that goes to in terms of which information should be shared. Even when a lot of progress has been made, for example, around beneficial ownership, and where we are required, for example, for some companies to declare their beneficial owners. Lawyers have gone ahead to advise that actually it's okay to declare to the government, but not to the public, for example, and therefore put in secret clauses within contracts and schemes that make it difficult to know who is behind what entity and at what point. So we are usually almost at the center of creating some of these schemes that enable financial secrecy, especially within the different jurisdictions. I would say for a fact, for example, that okay, I don't know, but I doubt that there is any person that goes to negotiate, for example, a double taxation treaty without lawyers. So we are usually at the center of how some of these legal schemes are made. And that has been one of the things that lawyers have been able to do to perpetuate these financial secrets jurisdictions. The second way is that as lawyers, we usually manage funds for clients on clients' accounts. And the way now that and how that sometimes happens is that as a lawyer, then you're mandated to shift those amounts or those monies or move those monies or utilize those monies as your client may require you to do. So in most cases, there is not a lot of regulation around that. If I have a client and they have money on my account as as a lawyer or as a firm, how do I then deal with that money, or how I move that money, or how I use that money is usually shrouded in secrecy. So, and with that, then monies can be able to move from jurisdiction A to the other within even law firms, and we find that sort of continuation in the perpetuation of such financial secrecy jurisdiction. And the example here, when I was reading up for this, the nearest example I could think about is how lawyers or law firms have been used to skirt, for example, sanctions within different countries. That, if I stole money from Uganda, I just put it on my lawyer's account. My lawyer goes, or the law firm goes and buys a house in London, for example, and no questions will be asked. Money would have moved, and then all people will be happy besides the people that the money would have been stolen from. So there is the use of the firms or lawyers' accounts to move resources, to utilize resources. The other way that lawyers have been enabling some of these financial secrecy jurisdictions have been through what they term as strategic litigation. And this never happens against government or what. No, it's usually against transparency activists or people that are trying to bring out information, people that are trying to bring out certain issues to light. If there was, for example, an NDA and I abuse an NDA, an disclosure agreement, then you're most likely going to find a lawyer somewhere threatening to sue or suing you for disclosing information that you're supposed to. This goes beyond, even if you look at, for example, the work that our colleagues have done, the investigative journalists have been doing. One of the challenges, the biggest challenges that they've faced have been threats of litigation against them, defamation, breach of privacy, computer misuse, and all those things. So there is also a way that we've used the law. The law, of course, is usually both a sword and a tool, a sword and a shield, depending on who is using it for what. So for lawyers, most especially when it comes to some of these financial secrecy jurisdictions, we've been using what lawyers have called strategic litigation against actions of transparency and accountability when it comes to moving of resources and all that. And lastly, it has always been lawyers have participated in lobbying, or I would say influence peddling, when it comes to creation of laws and regulations that affect transparency within the financial sector. And I'll give an example. Every year, there's usually a tax making process. For example, in Uganda, where you propose alternative tax proposals to the finance committee in parliament. What is very interesting is that sometimes before you present or after you present, there's usually the Uganda Law Society, there's usually also to come and present what they think is wrong or right about the law. And in most cases, they are not offering to close loopholes. Actually, in most cases, they are trying to create other loopholes which could then be exploited in terms of hiding resources or moving resources to some of these jurisdictions. I'll give an example. This is something that most of us maybe have heard of. In 2016, there were the Panama paper leaks that gave us a glimpse into the offshore world and how tax havens and financial secret jurisdictions deal when it comes to moving resources, hiding, and making sure that resources are transferred from one jurisdiction to another. And for this one particular law firm, Mossack, the one that where this the documents, the Panama Papers leaked from, had some very interesting work that they were doing. And this goes to the specifics of why we believe that lawyers are key enablers. This particular one firm that had over 600 workers within 42 countries was an agent for over 300,000 companies. You can think about that. One law firm with just about 600 employees scattered across 42 countries was an agent for over 300,000 companies. And of course, in most times, we are either company secretaries or company, we have powers to act on and for. So this one law firm had collaborated with and worked with over 1,400,000 other firms. Now, these other firms included accounting firms, included advisory firms, included, so 1,400,000. And within the leaks themselves, it came out that there were over 140 high net worth individuals. I didn't want to say politicians because some of them were not politicians. Some of them were just businessmen. Others were just people that had influence. Over 140 of them that this firm had created over 300,000 companies so that they could be able to move resources from one jurisdiction to another. And so this shows you that at the height of when these leaks came out in 2016, this particular law firm was the fourth largest provider of offshore financial services. So in the world, it was the fourth largest, meaning that almost a quarter of all monies that were going to be taken from the African continent, out of the African continent, some of it, or chances that most of it went through this law firm. So as lawyers, as the legal profession, we are key enablers in perpetuating and making sure that these financial secret jurisdictions stay the way they have been for quite some time. June, I see my time is up, but I'm only remaining with one slide. If I could ask for about 2 minutes, is that fine?
That's fine, Alan.
Okay, thank you. So I've discussed how we come into this bigger picture where we, I think, besides the accountants and the banks, we are the other critical pillar that has perpetuated financial secrecy. But we could be a solution in the fight and also contribute to the solidarity that Asha was talking about. And one of the things I think lawyers and legal their bodies, the professional bodies need to do is to enforce professional ethics. For every advocate, for every lawyer, there's that oath you take, and then there are obligations that come with that oath. And the idea would be that if you have colleagues within your membership that have been able to provide services, this kind of services, I think then we could then enforce some of our own ethics within the profession so that we can stop providing such services to some of these companies. Of course, that will be hard. There will always be a lawyer willing to do that work, but that could be the first place to start and begin with. And I'll give an example here in Uganda. where almost all scandals that have had monies, you'll find that a law firm was hired to pay on behalf of maybe government or settle certain what, and we are always there, and nothing is ever done to such a law firm. The license is not the practicing certificates are not revoked. Nothing. It's just a scandal that such and such a firm was behind such and such a thing, and then it stops there. So I think we could first enforce our professional ethics. The second, and also which is also hard, is to comply with some of the laws that we've made within our context and jurisdictions. Especially, I singled out laws against money laundering, but there are other laws that, and as lawyers, we then need to comply both with the statutes, but also with the regulations that regulate the practice. And this goes back to the beginning where I said that it's usually a conflict for you to say that, for example, a lawyer to find out, for example, the source of funding from their client. Even if they were given that information, chances of them verifying it and doing something about it are quite small. But where they are not able to, or where they've been able to, I think we should always start with complying with regulations and laws that we've set out for ourselves. The other way we would do it would be to regularly train ourselves. The profession is shifting quite a lot, and there's need for regular training on how do you identify and deal with issues around financial secrecy, issues around and money laundering, issues around tax evasion and avoidance. So for some people, it needs, or for some lawyers, it needs to be a continuous engagement, a continuous capacity building to especially to identify, to say that this transaction I'm advising on, or this transaction that I'm engaged in, is not a typical transaction. And therefore, as a lawyer, what do I have to do about it? And then, depending on that sort of discussion you'd have within yourself, you can be able to either report, either not go through with it, or advise otherwise, because at the end of the day, that is the work that you would be paid to do. Lastly, I think we could also, as we add on to this Africa Solidarity, join advocacy and do some good with public literacy litigation. Of course, the advocacy is that we've identified the loopholes, and as I think, for example, like what Pal is doing and leading on to say, these are the loopholes we're having when it comes to financial secrecy. And these are the legal solutions. These are the solutions that we want. If it's laws around beneficial ownership, let us advocate for those. If it's laws around compliance, declarations, anything that, as a lawyer, because we would know, because most of the times we would have participated in creating some of these legal loopholes, I think for us, then we can be able to advocate that some of those loopholes are closed within the laws that we do. And of course, public literacy litigation is that it's the flip coin of strategic litigation, to say, instead of threatening people with defamation and all those other things, I think once in a while, or always, we should be able to bring out cases that are in the interest of the public. And I think this has been very successful in several countries. There's been a appeal case in Kenya around the Mauritius double taxation agreement that was successful. There have been others. One has been filed in Kigali, I'm meant to understand, and all that. So that is also one way lawyers can influence policy around financial secrecy in terms of going to court and seeking redress from court. But of course, that happens whether the laws and the norms are clearly set to benefit the public. Where it is not, then we fall back to advocacy. Thank you very much. That was it. I hope I was able to cover what I was asked to do, to say that as lawyers, we are key enablers, and we can also then be key change agents when it comes to dealing with financial secrecy jurisdictions. Thank you very much.
Thank you so much, Alan, for such a wonderful presentation. I think we have different people joining us, and I think the majority are lawyers, and at least they've gotten something they can really relate with. And thank you so much for such a wonderful presentation. We have a number of questions in the Q&A section. But before that, I just wanted to give one of our participants a chance to speak. I think he had his hand raised for the longest time. So, Mr. Richard Ilunga Bishalanga. If you still have your question, Richard, the floor is yours. We're giving you a chance to speak. Mr. Richard Ilunga. Are you able to speak? If you're not able to speak, then we can move on to the questions. So we have a number of questions in the Q&A. First, we have Donato Mayo, who made a comment, I think. Accountant has to prepare financial statements from the primary information, for example, invoices, and whatever you cosmetic it will be out of professional, and the regulatory bodies has to punish them. In the circumstances, I do agree there are others who do not comply, and they have to be taken serious sanctions, including being banned from the accountant profession. I think that's a comment from Donato Mayo. We have an anonymous attendee who is asking, is there adequate support to lawyers to enable them to assist with deterring IFFs? For example, to undertake proper CDD on clients with a multinational footprint? That will be for you, Alan. I would like to ask, that's from Tom Mulisa, I would like to ask how neocolonization, after the increase of illicit financial flows, because in many countries, neocolonization is still existing in various ways. I think Madam Asha will take on that one. We have another anonymous attendee who is asking, mine is not necessarily a question, but rather a request. Could Asha please share her submission and we reread, because me as a person, I have not been able to pick the connection between the history of apartheid, slavery, and IFF. Sure, we're going to share all the presentations through email, but still, Asha can still address that small concern. We still have a few minutes left. Yes, so.
Shall I start?
Sure, you can start.
Okay, so I'm going to answer both Tom's and the anonymous question together, if that's okay. And just to clarify what my understanding of neo-colonialism is it has elements of economic imperialism, it has elements of globalization, and also donor-driven agendas, let's put it that way, conditional aid to influence or control the agenda of our developing country, of our countries. So that's my understanding of neocolonialism, where it's now it's no longer political, it's no longer a form of colonialism where a foreign country basically has political control, but has economic control. And certainly, I think illicit financial flows and the movement of money from Africa and the developing world to the developed world is certainly a manifestation of that. But I would just like to, I can understand that making this connection between apartheid, slavery, and all these different concepts linked to illicit financial flows seems like, like perhaps that I'm cloud cuckoo land. But as I've been studying tax havens, illicit financial flows, and thinking about our relationship on this continent with taxation, I came across quite interesting moments in history. And I actually began to realize how absolute singularly important it is for us to understand the history that we come from, to be able to even map out any future. And one of the very important aspects that I came across is this complicated relationship we have with taxation in the global South. At another event, I talked about, for example, the hut tax, where you had this war in Sierra Leone led by Bure, a tribal leader. It was in opposition to a hut tax that was imposed in 1898. In South Africa, you had the Bambata Rebellion, also in opposition to this hut tax, a tax that was imposed on literally homesteads and eventually on individuals, simply to get people to come and work in the mines, to come and work and contribute to this particular kind of economy that the colonizer was developing in each colony. This also existed in other colonies outside of Africa, like India, for example, where you had a salt tax also imposed. And protests, popular protests, the Bambata Rebellion, Bure's rebellion, the salt satyagraha or civil disobedience in India, all linked to taxation, right? So on the one hand, this whole link with both neo-colonialism, the colonial era, and where we are now is there. But on the other, what I would want to say, there was a person who asked a question about wealth taxes and how does wealth tax, I think he or she asked, how does the imposition of a wealth tax by all the different countries in Africa, what is the connection between that and building African unity and solidarity against illicit financial flows? In a nutshell, if you think about this history, slavery, apartheid, and this very weird relationship that we've had with taxation on this continent, right? And then you think about where we are today, where many organizations, tax administrators without borders, and many tax practitioners, many activists even, are talking about improving the taxation system, digitization, and all of that. And I'm not arguing against it. What I'm arguing against is a targeted approach to basically target middle class and lower income communities as opposed to the higher income communities. This is what happens. It's not only through VAT, it's also through pay as you earn, employment taxes, that you end up targeting middle class people. The essential fabric, the social contract in terms of which I pay my taxes and government provides services, is currently eroded on our continent. If you need healthcare, if you need serious chronic healthcare, and you're a middle income person, you can't afford to travel to another country, what do you do in your particular home countries? Even in South Africa, just recently, last week, I was literally the day before the webinar, an 8-year-old child from a middle income company died in a hospital from meningitis because that particular family's medical aid had run out. The young boy. So what has all of this got to do with anything? What it has to do is this: if a wealth tax is imposed And from what the economist Gabriel Zucman talks about, it's a really small percentage. If that kind of tax is imposed, it is easy to collect, relatively speaking, right? It will generate the kind of revenue that is required by government to build the social contract, to rebuild the social contract, to build the systems, to deliver services, and then, when appropriate, to start to target the lower income and middle income earners and expand the tax base. So this is not just about solidarity among African countries. This is also, in my view, solidarity begins within a country and extends among countries. In South Africa, there was a court case in the early days of democracy in Pretoria, where people from previously white areas brought a complaint to the courts saying that non-compliance and non-payment of electricity in the townships was discriminatory against them. Okay, so where the municipality of Pretoria condoned non-payment of electricity bills in the townships, whereas went after people in the high middle income and high income areas, that actually constituted discrimination. And that judgment was a brilliant judgment where the notion of solidarity within the country, where you pay because you can pay right now, and you actually subsidize as part of a solidarity type policy, which is affirmative action, right, in South Africa. You actually subsidize previously disadvantaged communities. And that kind of principle needs to be incorporated more. And that's where this notion of wealth tax comes in. Then when you come to colonialism, neo-colonialism, and where we are today and the connection with apartheid, slavery, and all of that, you realize that one of the reasons why we focused, why is our agenda focused on this form of increasing efficiency in tax collection and not on imposing a wealth tax? Why is that so? Is it not because our agenda on addressing these issues is governed by the donors that provide us with funding? One donor recently talked about their priority being wildlife, providing support to organizations that were addressing issues around wildlife. And, these donor-driven agendas are agendas that we've talked about for years. And today we are also not only dealing with a donor who decides that a particular vaccine is more important for pneumonia than a TB vaccine or TB medication, right? Which has been talked about extensively and written about extensively. Now it's also, in this context of illicit financial flows, what is it that we in Africa need to address? What aspects do we need to address here? And how do we go about addressing it? And, my opinion, which is derived from, world-renowned economists like Gabriel Zucman, for example, is that this wealth tax is likely to give us that impetus that we need to build our countries, to build our resilience, to build our taxation system even, and then take the next step towards targeting middle and then finally lower income earners. So I hope that that's answered you. I can imagine it probably brought up more questions.
Thank you so much, Asha, for that. I think the question is well answered. If not, the person who asked can guide us further, and then we can see how to connect you to. Also, we just a reminder, we're still going to share all the PowerPoint presentations with our attendees. So whatever was not understood perhaps can be understood upon further review of the notes. Also, Alan, I see you've answered the question on the Q&A. Not sure if you want to still voice your answer. Just a few minutes,
Yeah.
and then.
Yes, I'll just take a minute. No, yeah, like I said within the chat, that there are actually quite a number of resources that lawyers can use to know whether the transactions they're engaged in, or whether, because like I said, it's quite also hard to expect and put a burden on a lawyer to do the know your client. It should be the bare minimum. Yeah, but in terms of where verifying the information and doing all that with what they are critically supposed to be doing may be a little bit hard, but there are quite a number of resources that are out there that lawyers can tap into to know, especially first, how do you identify illicit financial flows? Was this money legally made? If yes, is it legally moving? If it wasn't legally made, why am I dealing with illegally gotten money, and all those quite of issues. And I've given an example of the recently launched Tax and Illicit Financial Flow Information Hub, the TIFF. I've given the link to that, but also resources, for example, like this webinar, Palu and other. I've seen some webinars with the East African Law Society and all that. Some resources where, because some of these issues may not be known, or where they are known, people may be reluctant to factor them into as they do their practice. So websites of organizations like PAL, the Stop the Bleeding Consortium, East Africa Law Society, Youth for Tax Justice Network. There are quite actually a number. And but we could start with the TIFF, because for it tries to consolidate most of the work that has been done around taxation and illicit financial flows. And we start there to have this conversation. But also to note that most times within the regulations of the profession, some of these things, and also within the laws, they are known. You would be required to get certain basic information as a lawyer about your client and all those other things. So most of the times, if we only comply with some of the statutory and regulatory obligations that we have, then it answers halfway answers the question that we'll be having of how do you identify and deal with work or transactions that perpetuate or facilitate illicit financial flows into secret jurisdictions. Thank you very much.
Thank you so much, Alan, for your answer. I think there's also one long comment divided into 3 sections from Teresa Nanozi. This is partly a comment. Yesterday, I attended a national dialogue about Uganda's position on the UN resolution on the Framework Convention on Tax. There was a lot of interest, but also a lot of skepticism about the UN as an objective arbiter, especially as its landlord voted against the convention. Surprisingly, some people, one thought, would know better, were arguing to say that to stay with the OECD leadership on tax. There's also a lot of ignorance about the contents of the resolution. So we need a lot of national level discussion and dialogue to ensure that all stakeholders understand what the stake actually is. In summary, skepticism about the potential of the UN Tax Convention to bring gains for developing countries is deep. Even among tax justice elites, we need a lot of national level engagement if the continental solidarity we're talking about is to be realized. Well, thank you so much, Teresa Nanozi, for that input. And now I'm going to give the floor to our executive director, Mr. Donda is on the call with us, and he's also going to provide a bit of input into the discussion and also provide closing remarks for the session. Welcome, Mr. Donda.
Thank you very much, June, and thank you very much to Asha, to Alan, and to all the colleagues who have been active in this seminar, but also in the series, not just today. I'm glad that I was able to join you today. Just like Asha, we've been flying all over the place trying to do this and that, so I've not been there in the previous two seminars. And just to build on what, or to highlight what Asha presented about solidarity, is for us to remember that solidarity is at different levels. There's solidarity at the individual level, solidarity at the communal level. Remember, Africans' human rights, rights, our rights group. The solidarity at the state level, that states can give each other solidarity. The solidarity at the sub-regional level, East, West, Central, North, and South Africa, and of course, global solidarity. So you should bear in mind that solidarity can play at these various levels. And the example that Asha has just given right now about saying those of us in a community who are well off or slightly better off for the moment, as part of our solidarity, we agree to pay for goods and services, knowing full well, or in the expectation that those who are not doing so well can then be able to get these goods and services free or at a cheaper rate. That is indeed solidarity. So that's one thing I'd like to say. Second, there was the question that was asked about neocolonialism and about imperialism. And I think that Asha answered it, but let me just again highlight it. That what we're fighting is imperialism. What is imperialism? Imperialism is the few imposing themselves against the many and exploiting the many mercilessly and having institutionalized this oppression, this suppression, this exploitation. That is what we're fighting against, so that everybody gets something rather than a small elite are able to manipulate systems, manipulate laws, manipulate institutions to make sure that they are literally, looting us, and so on. So it started with slavery. And in slavery, what the powerful did was to took human beings, to kidnap, abduct human beings, and to use them as animals, to use them as tools. When this was no longer possible, when this was no longer able to be tolerated, they moved into colonialism, where they came and invaded communities, drew borders, set up taxes, set up policing and military systems, and then just looted resources, looted land, looted minerals, looted our labor in terms of hat tax and poll tax, and we having to work on their farms for free or for a much lower wage than was ideal, and so on. And when colonialism was no longer fashionable, when it could no longer be sustained, then they moved into neocolonialism. And this is now when we have the rise of neoliberal capitalism, which is exactly the same thing. You impose a system where, on the surface, it looks like there's global democracy, like there's global equality, like we're helping each other. But in reality, it is institutionalized oppression. It is institutionalized oppression that's covered in good language, that's written up in treaties and written up with, backed by institutions which look nice. But in reality, all of these are calculated to put, especially global South countries, in a situation where you're ending up giving much more than you're getting. That is why you have IFFs being used as a tool. Multinational corporations come, they're backed by their governments. They force themselves into these bilateral investment schemes where they literally get all these incentives, and then they're literally looting all our resources, are not paying any tax, are not giving anything back. And this is backed by the IMF through sovereign debt and loans and aid conditionalities like structural adjustment policies. This is backed by the WTO through unfair trade terms. And right now, this is backed in this era of climate injustice by these so-called carbon credit schemes, where you're seeing now, companies from the global and lately from the Middle East coming, entering into unholy deals with our governments, owning huge swaths of lands, forests, and so on, regardless of the people who live in them, and then using this to justify the global North not reducing on their carbon footprint because they claim they've bought carbon credits from us in ways in which we're not getting anything. So one should be able to see the continuum and the evolution over the years. If one doesn't see that, then one misses it. The point was made about the big four firms, and a question was there, like, but the big four firms are just doing what their clients want. One should look at the conflict of interest that surrounds how, like, the big four firms operate. On the one hand, they represent and advise and make the money of these multinational corporations, these huge multinational corporations. But on the other hand, they come and pretend that they're impartial advisors of government on things such as tax policy, things such as tax administration, and so on. So they enter inside government, they're able to get confidential information from government, which they use to serve their clients. And then at the same time, they come and they pretend that they're helping government to make good policy. And you find that the same firms are the ones who are also driving policy at the OECD, for instance. So they've literally perfected a scheme where they are serving their clients, using and manipulating our governments and our intergovernmental bodies with very clear conflict of interest. So these kind of things should disturb us. Whose loyalty? Who are they loyal to? Are they loyal to the interests of the people when they claim they're advising government? Or is it for the benefit of their rich clients? And finally, the point that was made about support to lawyers, like how much support exists outside there for lawyers in law firms who are trying to do the right thing, who want to represent their clients, but also want to make sure that they do not harm the greater public good. So just to say that there are some moves in that direction, they are not yet sufficient, but they are there. So for instance, for us as PALU, in 2016, we passed a code of ethics on anti-corruption and compliance in business relations. And one of the things it addressed was specifically this: what's the role of the lawyer representing or advising a big company that you can see is doing wrong? Stuff that is either illegal, that's easy to deal with because that is crime, or stuff that may not be illegal, but is immoral. So we advise our own members that please balance your loyalty to your client and your service to your client to service to the greater good also, you know? And then we set up a scheme. It's not yet been implemented perfectly. We set up a scheme because individual lawyers and law firms can sign up on the code of ethics when they want and promise in their own souls to live by it. We're not a regulatory body, so we can't force you. But, you know, it's your own commitment. But secondly, we signed a memorandum of understanding with the national bar associations, where the national bar associations can now take aspects of this continental code of ethics and put inside the practice rules of the country, which then make them binding. And then the national bar associations are also supposed to set up advisory bodies with a call line where a lawyer facing an ethical dilemma can call, and more senior, more experienced, more knowledgeable lawyers can advise her or him on how to navigate. So unfortunately, this countrywide network of advisory centers is what has not been set up because of resource constraints, but that really is where we're heading to, that you'll be able to sign up in a code in which you commit yourself to do the best you can as an African, or as a person operating in Africa, and then that will organize for you networks of support, whereby when you want to question how to deal with a particular challenge that you're facing, then you're able to get that support. I think that's what I'd say for now, but to say let's continue engaging, I think the important point has been made by the colleague from Uganda. So just to tell you that the Ugandan delegation was actually amongst the leaders in the process towards the resolution last year that kicked off this process, and the resolution last week that led to the call for a framework convention at the UN level, and that they knew what they were doing. Mentality. I think it's really slavery mentality when you say, please do not try and rescue me. I am happy with the enslavement that I have. OECD is enslavement. It is what we have right now, but it is enslavement. It's a club of 38 countries making the rules for over 193 countries in the world, and they make rules that suit them. So the UN might be imperfect, but the way out of it is how to strengthen the UN rather than say that the UN, where we all have a vote, because it's imperfect, let's continue with our enslavement. But I think as the colleague themselves has recommended over and over again, let's have more engagements at national level where we really break down for the people what is happening, what is being done in Geneva, what is being done in New York, what is being done in Addis at the AU, and to show that actually a lot of thought has gone towards where we are. And it's not that African states or even other global South states voted yes from a position of ignorance. Thank you very much and enjoy your weekend.
Wow, thank you so much, Don, for such a great input. I don't know, Alan, if you wanted to respond or...
No, I was just saying thank you.
Okay. So thank you so much for such an interactive session. We really thank you, our attendees, our panelists, really. And most of all, we thank you, Ms. Asharam Gobin, for sparing about 6 hours of your time from last week, but one last week and this week, and providing such a thorough presentation. We really thank you. Thank you, Alan, for taking your time off your busy schedule to provide such a great presentation and contributing to the discussion. We really appreciate it. And of course, Director Mr. Donde, thank you so much for your contribution. I don't know, although we are running out of time, we have one hand raised. So I don't want to ignore this person. This is our last webinar. So perhaps we can just give him about 2 minutes. Mr. Mark Kamar, I see your hand is raised. Please, you may unmute and speak. Mr. Mark Kamar. Mr. Mark Kamar, are you able to speak? Or because I can see your hand is raised.
Maybe it was raised by mistake. I think
Okay.
it's okay. We can just wrap up.
Okay, no problem. So that's all from me. Thank you so much.
Thank you very much. Nice to see you, Dawn.
Good to see you too,
Thank you.
Asha. We'll catch up
Okay.
later. Yeah.
Thanks. Have a good Christmas.